Yeah, I turned those speakers off. Now, I don't know if they can hear you.
What's that? Hey, Danny, can you hear me all right on the live feed? Awesome. Cool. I'm going to be speaking here in about a half an hour, guys. This is an event that I'm going to be doing for John Burns Real Estate Consulting Group. They contacted me a little while ago, and we're going to be going on here in just a few minutes, actually. So just hang out for a little bit. It's going to be about a half an hour or so. I have a few questions that I'm going to answer. It's going to be very rapid. And I'm going to turn these speakers up so you can hear what they're saying here in just a minute. So just give me a few seconds here, or another couple of minutes, maybe about 5 minutes or so, and we'll get started.
What did that say? Your default speaker changed?
I'm not sure about that. Yeah, I don't hear it in here anymore. There we go.
Layers in the channel.
Are we going to be able to turn these speakers on too here in just a minute, so that we can hear it through the live feed here?
Can you hear it in your ears?
I can't.
So,
But as long as I can speak through this, we can hear through here, and that's cool.
okay.
Yeah.
So yes, there are certainly services, and there are services. It doesn't matter how big you are. If you have
all right, guys, we're going to be starting here in about 4 minutes.
Market, you can do them.
Okay, so thank you for that, Jason. We're coming your way now because I've heard you. I brought this up to you in the past, and you've always kind of been, you don't want to go down the bundle path. You don't want to combine labor. And how do you feel? Do you feel the same way?
Yeah, I'm still there. I think it's labor is a bundling the services is a high risk, high reward proposition, right? And there is big issues with it beyond just in a downturn, your competition is going to be somebody in a pickup truck who can slap a magnet on the side of his truck, right? Whereas you've got all this institutional brick and mortar behind your business. We've got dealers with channel conflict, right, or products sold through the framers. And then I think Craig's right, a lot of the dealers moved into manufacturing, and that's one of the things that they do well. But I have a hard time believing that a dealer, unless they're bigger, like Jim's size group, has the competency in distribution, manufacturing, and labor. I mean, it's hard to be very good at any of those, let alone all three. So I think to me, you're more likely to see some of the builders come back in the channel, right? Where you see like Pulte do an ICG deal down in Florida, right?
Jim, now I just heard the builders make a comment about how it's great to be a large builder because you have some sway in getting the materials, but if you're a custom builder, how that would be difficult. You've taken a very different strategy than a lot of the other dealers. You're focusing on custom builders, on remodeling. You've got some DIY. Has that made it difficult to manage your business kind of versus competitors with the current operating environment with materials, or has it not been the case? I mean, walk us through that.
Appreciate it, Todd. No, we use our scale, we lever it, and then we provide, that supply chain opportunity to our custom home builder customers. And again, quite a number of our acquisition, as Jason would know, is been tuck-ins. We buy a geography in terms of getting a major player there, and then we consolidate and bring some other players into that same geography. And in so doing, we're leveraging our capability. RailServe DC as an example. So we're bringing that scale, but also sharing that with what are the smaller independents in the environments that we bring onto the platform.
Yeah. So the value proposition really is you enable custom builders to compete in a purchasing environment where they won't have the teeth to necessarily go after and negotiate in the way that you can because of your overall scale in general.
Completely, Todd. And you know, you can't be masters to both. You can't be, you know, I'm production builder focused, therefore I get all the first outs to, you know, DR Horton or Lennar and the like, or I get my first outs to the custom home builder. And we very much segment, you know, our business, you know, focused on that custom home builder. And you know, the smaller independents that's their bread and butter. That's why we love adding them to the platform.
Yeah. Okay. Just two quick questions. Have any of you worked with any of the single family rental operators, the build for rent piece? Have you touched that? Any perceptions of how that's been different versus the traditional home builders, or is it the same?
We have not had direct experience there, Todd. No, ours is more the traditional custom home builder pro remodel.
Okay, and then we did get one question from our viewers, and it was a kind of a response to the prior panel. There was a comment about the need to de-layer the layers of kind of the upstream this is what Jason Freeler talked about, the distribution and the manufacturing and all those, and that was why there was so much cost. React to that. What do you think?
Yeah, my perspective is, you know, it's that last mile, right? Go all the way back to optic fiber, right? You know, and you know everything went down the street, but that last 100 yards into the home. I mean, our business is very fragmented in terms of delivery, right? Every job site is different. Every job site has its unique properties. You know, so that's the value that we bring from that standpoint.
I would say that if you look at the layers in the channel, it's pretty flat right now. If I'm not an American Construction Source, I'm a member of LMC or LBM Advantage, who performs, you know, I wouldn't say exactly, but similar kind of functions there. And so just about anybody, I'm going to go through a buying group or my home office when I'm buying commodity materials, and for wholesale distribution, I am reserving products that are slow enough movers that I want velocity. It's more important to be able to get them quickly than it is to get the very best ones. And so I'm not sure there are the layers there that builders sometimes seem to think that there are. There were in the past, but that's been a generation ago. So,
Greg, I think you're spot on. I mean, our sourcing is direct with the mills, right? I mean, Canfor and the like, you know, through our rail serve DC, and then we're moving product out to the local LBM distributor.
Yeah, I know. I think
I think we're running out of time here. Okay. So I just wanted to thank you all. If you are focused on the dealer space and you're not interacting with these three gentlemen, you need to. So please reach out with any questions. But I appreciate the perspective, and exciting things are happening in distribution right now, and I know you are all touching all of it. So thank you for sharing some thoughts.
Thanks for having us, Todd.
you.
Todd, appreciate it. Thanks all. Have a good, safe days.
Now we're going to discuss the pain point of the last 6 months, which has been lumber. We'll invite our new panelists to come and join. That's going to be led by Tim Sims, will be leading that discussion. And we've got 4 panelists to go through, which has probably been the most beam-ridden topic within construction this year compared to any other product. I heard the builders make a comment that they were willing to pass along price increases for anything but lumber. Anything but lumber. So let's talk about lumber. Tim, why don't you take our panel away?
Okay, great. Thank you, Todd, and good to see everybody. And so hello from the treehouse here in Washington. And for people wondering, these are indeed real trees. I'm Tim. I'm in the building products group here at John Burns, and my background is home building and sales and marketing, product development. And this session is named after the Lumber Playbook issue of The Light. It's a weekly newsletter many of you get. That was started at the beginning of the pandemic, talking about opportunities and potential in this crazy time of change. That issue went out to over 80,000 people and was opened over 31,000 times. But that was 5 weeks ago. What's changed? Well, the challenges persist. We know that from our builder survey that came out last week. So these things are on the minds of everybody and should be. So what are the boots on the ground perspectives, and what are the watch out fors from their standpoint, and then what are some strategies and ideas we can take away to do even better going forward? So we heard from Dennis and Lindy earlier. On the build side, let's get real-time, ground level, supply side intel, and let's introduce our Lumber Playbook Live panelists. And today we have Jim Schumacher. Jim is the author of ShoesLumberReport.com. That's shoes spelled like a regular shoe you wear. Lumber data, trends, anecdotes published weekly. That's definitely a must read, especially now. He's also the sales manager at Roof Trust Supply in Bothell, Washington. We have Monica Smith, director of logistics for wood products at Weyerhaeuser. Everyone knows Weyerhaeuser, a premier timber, land, and forest products company. Last year, they reported $7.5 billion in sales, and they own more than 12 million acres of timberlands. So, of course, we're talking about lumber today, right? So how appropriate, lumber and logistics. I think you'll find Monica's job directing how all that product moves around North America from 50 different warehouses by truck and rail. It's no easy feat. I think you're going to find that pretty fascinating and kind of an intense job right now, I'm sure. So next is Mike Wisniewski, CEO and co-founder of Materials Exchange. It's a brilliant lumber trading platform, allows buyers to place bids and sellers to place offers for truckloads and carloads of common commodity products. Fast way to commodity price discovery. And I think you're going to love to hear his unique perspective. And last, but definitely not least, someone you must follow on YouTube, my friend, the Uneducated Economist and lumber influencer, Simon Carone. Simon has single-handedly educated hundreds of thousands of viewers, everyone from a builder to a homeowner to hedge fund managers, and offering his firsthand real-time knowledge as a salesperson in the lumber industry. So we are all in for a treat today, so let's get to it. Thank you, Jim, Simon, Monica, and Mike for joining us today. So Mike, let's start off with you. What are some of the interesting or crazy things you're seeing in your world regarding to supply chain constraints, pain, war stories? What can you share with the group? Something interesting.
So what I find most interesting through our platform, which breaks down the walls of the traditional relationship based selling and buying that happens in our industry, what we are finding is first the distance that the product is moving in our transactions is like unheard of in past times. 1,200, 1,300 mile hauls. Which is showing the disconnect in the supply-demand equation of our industry. But the really interesting part of that transaction is who's selling it and who's buying it. And what's happening is we have retailers who are buying product under contract based off of a price that a news report says, which is completely off from where they can sell it in the live market. So we're reversing some of the flows in this supply chain, which is really cool. So retailers who have excess inventory can sell to distributors. What that has done is, like the panel before was talking about how many retail locations there are in the United States. Every one of those retail locations can now be a distribution point or wholesale product. So it's just, we're breaking down these walls of how product is supposed to flow and creating opportunities for retailers to offload material and make money on it and get paid immediately.
Thanks for sharing that. I think that's something probably a lot of people didn't think they would hear today. So thanks, Simon. What are some interesting or wacky things you're seeing in your world regarding supply chain constraints? You're in lumber sales. You follow this stuff really closely. What are you seeing?
Yeah. So when it comes to retail sales, I mean, that's like the end line, right? That's the bottom of the barrel when it comes to lumber sales, and that's where I have my my hands on. Now, last year I had a hell of a time trying to sell deck packages. I'm just trying to source out the material. The pressure treated lumber was very hard to get out there, and I found that I missed out on a lot of products or a lot of projects that I could have done or sold just from the simple fact that I wasn't able to get the supply in. This year, no problem. I can get all the supply I want, but the prices are off the charts. So I'm kind of in the same situation where I feel like I'm missing out on a lot of projects that I could be selling last year from the lack of supply, this year from the prices just being overheated. So if there was anything that I found that was crazy or weird in the supply chains, that would be it.
Yeah, so it can really constrain the ability to actually sell material right now, as we've heard. So Monica, please, when we think about developers, a lot of times they talk about lumber, lots, and labor as kind of stress points a lot of times. But now they have to add logistics to the list. So since COVID, what are some of the crazy things you've heard and seen in your world, or war stories? Oh, you're on mute. Famous Zoom words.
Sorry. Yeah, I think it's the sheer demand that we've been experiencing really for the last year. It never really slowed down. There was maybe a pause initially, but things picked up significantly. And, receivers can't even accept all of the inbound volume that's being demanded and coming their way. And so it's just really outpacing not only the overall supply of product, but the supply of trucks and rail cars. And because inventory levels are just really low within the channel, every single order and shipment is scrutinized. And so it's just creating a lot of noise in the system. And then, last year when you added in the volatility of impacts of COVID and what it does to, railroad crews and the supply chain, we're starting to see that regulate, but there are still pockets where that is a significant impact that creates delays, and it's just disrupting the entire supply chain.
Wow, there's a lot to unpack there, and we don't have time for all of that today, so if anyone wants more information, please reach out to the panelists for more. So Jim, what are some interesting things or crazy things that you've seen in your world? You're a sales manager at a supplier, builds trusses, sells lumber packages.
Yeah, so it's been to say it's been a crazy 2021 versus what we saw in 2020. It was kind of a shocker. A couple things that really stand out to me. So our biggest competitor in the marketplace is now recently merged Builders First Source and BMC combined to a singular one. And what I've heard really over the past, I'll call it last 60 days, is these agreements that were basically made on a lot of the big production builders, is they're basically going back and now not honoring those and changing the rules. So I kind of see a little bit of, I'll say, a relationship strain occurring when this is all said and done. So it's, in essence, they kind of have certain builders over a barrel a little bit, which, I mean, I look at it that's going to have an impact at some point in time. It may be a little farther down the road, but people have memories like elephants, so that's going to stay for sure. And then the thing that's interesting is on the multifamily side, everybody uses the word, and here's the word allocations a lot right now. So on the single family side, there's a protection happening as far as the EWP manufacturers, names specifically, but the three primaries is they're protecting their turf on the single family side because there's brand loyalty there. Then when you get into the large scale multifamily, even on the commercial structure or the big multifamily divisions of those companies, there is no brand loyalty with that. So I've had a handful of jobs right now where I cannot even get a quote for a bid that is not going to start in this calendar year. So I'm having to just to kind of create some estimates on lineal footage, like a 2x10 takeoff to basically give them kind of a budgetary aspect, but that's kind of a crazy thing, and I've never seen that before in my life, of someone not even willing to design and quote something because, I'm not going to ship it to you because we're reduced allocation quotas from we had from last year. So
yeah, that's pretty unique. I mean, it's unique times. The question is, when you're in those positions, what are you to do? So it's pretty interesting for everybody for sure. Simon, what are people now? Your YouTube channel has, I don't know how many hundreds of thousands of views overall, but what are some of the comments? I know you learn a lot from the comments, the things people are asking. What do you learn from that, or what's your takeaway from that?
Yeah, so I mean, my channel has a broad range of people who follow. I have a lot of builders, a lot of real estate agents, a lot of just people who are interested in just learning about economics following me. But I guess if you were to kind of go through those comments and look to see what some of the biggest questions are in there, I would say probably like the biggest question that I would find out there is when is the housing market going to cool off? And a singular answer to why lumber prices are so high. That's probably the biggest questions that I'm finding out there from my viewers.
And we all know there's not a singular answer, right?
There is no singular answer to the lumber. I have done hundreds of videos on lumber prices, lumber curtailments, everything that kind of led up to this whole time. And still people ask me, why are lumber prices so high?
Right. Right. Well, it's persisting, and then people is definitely top of mind. So, Jim, what about you? What are people asking you? Or what are your clients calling about and most concerned about?
Well, really two things, is the material that you're committed to ship me, am I going to be able to get it when I am expecting it? And that's probably question number one. And if anything, right now, the price, everybody knows the price is kind of out of control right now. So it's becoming a little bit of a less of a sore spot because everybody knows it's out there. But that's kind of the biggest piece that's really kind of driving people right now. The biggest concern that they have is, can I get wood?
Can I get it? Right.
Yep.
Yeah, thank you for that. Mike, what about you?
Well, the first thing I want to say is how people are communicating with us. We sit outside of that traditional relationship. So we hear from people through LinkedIn a ton. In fact, just this weekend, a CEO from a lumber company in Lithuania is talking with me on LinkedIn how to get into the US market. Well, that's what we're hearing are people from the non-traditional sources that want to get into this market. And it's the barriers to entry that they're finding is what's causing us to have higher lumber prices because, we've all had the simple Econ 101 supply demand. Well, we can't raise supply enough because there's barriers to entry for getting the supply in. But it's fascinating to me. There's a lot of supply around the world coming from non-traditional sources that want to get to the US. And we hear from them all the time.
I've been hearing that from a lot of folks too. Where there's friction, there's opportunity, and where there are layers, there are opportunity. We just heard that in the last panel as well. So, Monica, when you and I first spoke, I could tell that you were really passionate about certain logistics challenges. So can you please share what have been some of the pinch points in logistics, that keep you up at night or that you've seen that are persisting? What's keeping you up at night?
Definitely. Yeah, I think the biggest one for anyone in the transportation industry or shipping industry to understand is the driver shortage. We've been talking about it for a really long time, but it's a very real challenge. And with the complications of COVID, it's really highlighted where we are exposed around the labor shortage in general and how it will impact our overall supply chain. And so, what are some things that we can do to be more efficient is driving efficiencies throughout the system. And we often like to operate in a just-in-time environment. We like to operate when the price is right, to place large orders. And both truck and rail really can't provide a consistent level of support anymore because everyone is working with very slim resources. And not only at origins, but destinations, they're also labor constrained many times. And so there just can't be a huge shift or volume or volatility because our receivers can't receive. And so it drives prices up and it will turn drivers away if they have a bad experience at any one site. Unfortunately, drivers have a say today in where they want to haul. And if we aren't being driver friendly or what we call shipper of choice, they may never come back to our sites for receiving or shipping. And so it's just a real problem that, we need to really understand and then also start to take action against because it will ultimately drive prices up. And, we need to find ways to leverage rail, which isn't always easy for receivers. But we're going to reach that point where there's just not enough drivers to keep product moving by truck. And so we'll have to get creative and figure out the rail system and then also make sure we have the infrastructure for receiving and shipping so that we can be efficient at each end and make sure that the product can flow the way we need it to meet our customer demand.
I'm glad you brought that up. So is there a number that would attract more drivers to the industry, the kind of wage hike that would kind of reflect what that responsibility entails? Would it be like, what's your feeling? I know you're not being held to this, but 10, 25, 50% more, what do you?
Well, I think everybody's trying to figure that out right now. I mean, really over the last probably 12 to 24 months, many carriers are reporting anywhere from 3 to 4 rate increases for their driver pay, and they still aren't able to retain drivers. And so it's going to be a mix of not only salary, but figuring out how we can maximize their home time, because there's not a lot of folks wanting to enter the driver market today and be on the road each week. And so, you know, there's going to have to be a not only a pay increase, a benefits adjustment, most likely, but then also kind of a strategy shift in how we can attract people to want to haul, you know, for flatbed trucking, flatbed shipping, because it's just maybe an undervalued or underappreciated job today.
As are a lot of the on the receiving and the dispatching end as well, and just all those different layers through the construction industry just doesn't have that same sort of feel to it or image as a lot of other industries. So we definitely have to do better there. So Jim, the question on everyone's mind about lumber is, when will relief come? At least that's what people are asking us. Now, we're not forecasting that today, so no pressure, but we do want people to think about different strategies. So knowing that these supply chain coordination issues are persisting near term, and probably a lot of them into next year, what should building products companies, builders, developers, how should they be planning to continue to produce the homes we definitely need? Or maybe some things you've been doing or your customers have been doing that stand out to you that you can share?
Yeah, great question. You know, a couple things when you talk about this overall supply and demand, it pretty much corrects itself. You know, we'll just use OSB, which is kind of the hot topic right now, as far as, you know, I referenced that as the commodity king, just for the price ebbs and flows and highs and lows that it goes through on a weekly basis. But you know, at least on the West Coast, there's been supply taken out of the chain, which Peace Valley Mill, which is LP's OSB line, will come up. I think it's in July is when it's going to basically kind of be producing and all that. So that's going to bring some additional OSB relief into the marketplace. But I don't think, as far as the sheet goods, I'm expecting to kind of see some relief with that. It'll be probably September, October is when I see that. And then with my customers on the lumber side, you know, OSB is kind of a wild card, which you really have nothing to kind of run with as far as evidence. But on the lumber side, you know, I just track the cash to futures basis and kind of see what's that look like. You know, if you spin the dial back a year, or excuse me, not a year, but a month ago, there was a significant discount sitting in really not only to May, and you look out to July and September. Well, and some of the things that haven't really been pulled into play is the changes in limit up, which, you know, go back a number of years. It was like you go up $10 a day and then it would correct, you know, 15 up or down. Now it's 35 and 45. So it's almost like the severity of change is basically played to have the ebbs and flows go down. So the aspect of being able to control risk is, you know, with builders is they want to put the risk on the suppliers, like a company like myself or whatever, but they don't want to basically put any of their own skin in the game. Well, I think they need to put skin in the game as far as an insurance policy, and that's kind of really what lumber futures are, is basically based off of what that futures are. You know, allocate a portion of your funds as an organization to basically use that as protection, you know, to ensure that basically, you know, if you have to pay more significantly, then you're going to have an insurance where you're going to be able to sell that futures contract and basically take a gain and offset that higher cost, where I don't think home builders really, for the most part, really even pay much attention to that. So that's an aspect where, you know, technology and really needs to kind of come into the sophistication versus just beating every supplier and basically making them be the one to take the grunt. You know, because now the suppliers, just one last thing is, like on the previous session, was the suppliers are that much bigger. Well, the ability to push someone around, that's going away. So that's how I see it.
Thanks for sharing that. And so there was a question from the audience about when you think about relief, are you thinking a couple $100, $1,000, $5? I mean, what kind of relief? Can you even say that right now?
Sure. No, well, I mean, if you look at SPF, which is basically what lumber futures is trading off of, it's pushing right now. It was limit up today at 1157. You know, it never crossed the 1100 mark until just a week ago. You know, so I'm thinking in that 700 to 800 range is going to be probably our new norm. I don't really see 300 to 500 pricing kind of coming back at it anytime soon. So, so I'd look at probably about a 20-25% correction, probably inside the next 6 months, coming back to what I would consider the new norm.
Okay, great. Thanks for sharing that. And So we have a couple questions from the audience that we'll get to, but let me ask Mike and Simon, what have you seen adjustments people make to address or mitigate these different challenges? There are a lot of different maybe technical things out there or software options or whatever maybe, but what have you seen people actually do in the field?
Well, we're seeing people use alternative products, and one of the ways we help them is to get the data, the design values for those products into their hands, like the American Lumber Standards. We've talked with software vendors that have design software about adding more products to it. There's a moat around the traditional way of doing business in our industry, and we all know our industry is very slow to change, right? So if you say, well, you can't put that in my building because it's not designed for that, well, you've just reduced this supply options for what you can do. And it's not even that. I just dealt with a guy who had 15-30 seconds OSB spec for his roof. And I said, well, we can get you 15-30 seconds 4-ply plywood. He's like, well, I have to go check with the builder to see if that'll work. So it's interchangeability isn't there.
Uh-oh.
So making those alternatives and substitutions easier, maybe even on the plans to go back and forth, or even a list of substitutions might be good. What have you seen, Simon?
Yeah, you know, when it comes to my part of the industry, I guess probably what I have done to try and deal with this is just to try and keep that communication up and going. Really, there's not a whole lot I can do to try and mitigate the problems that are going on, except for to keep those communications up and going. I try and find out from the vendors what might be in short supply, and then in turn, I tell the customers what that is. You know, before I used to tell customers, you know, let me know 2 weeks to, you know, before you need your doors and windows. Now I have to let me know plenty of time ahead to make sure that we can keep that steady flow of materials coming to your job. Ultimately, that's the only thing I can do is to keep those lines of communication open and to make sure that that I'm aware of what's coming up and that I translate that to the customers so that they know.
Thank you for sharing that. So, Monica, what are you, as far as ideas and workarounds, we had a comment or a question about truckers possibly being scheduled more like pilots, and maybe that that some of the shortage might be from incentives due to stimulus, so they aren't coming back to work. But what are you seeing to address, because this is a strategy event, what are you seeing as far as strategies or things people are implementing or thinking about implementing to address these?
Yeah. So the stimulus definitely has had an impact where drivers are choosing to just not work altogether. And, you know, you could speculate it's partly due to COVID, kids being home, you know, all of those things. But either way, you know, what are we going to do differently? And I think, you know, many trucking companies are getting very creative on how they will attract new talent to the workforce. There's a lot of visa programs that are being explored and trialed to bring new labor outside of the U.S. into a training programs, since a lot of the training schools don't always have the best turnout, or they go through the training process, but then the work is just a little bit too difficult, or they realize the time commitment away from home. And so, you know, we might start to see a shift in how we can minimize the length of haul and really leverage shorter length of haul for drivers, getting them home more frequently, and then really think differently about how we maximize, you know, intermodal, for example, or rail, where maybe we had that sweet spot in the past between truck and rail. Maybe that shortens up a little bit. There are some difficulties with that even when we are product constrained, because there's maybe not enough product to even ship a rail car to a receiver. And so there's a lot of challenges out there, and you know, so what can we do better? We can forecast more accurately. We can have plans that are consistent and reliable. Neither truck nor rail systems are really built for volatility today. They're not sized for volatility in the order file. So whatever we can do to smooth that out will really help us to move product more timely, consistently, and cost effectively.
Thanks for sharing that. So thank you very much. Looks like we are out of time. So thank you very much to our panelists. If you haven't connected with them on LinkedIn or you want their contact information, we can provide that to you. A couple of people asked about that. And we appreciate everyone being on today to share their knowledge and do that transfer of the information. Hopefully it's helpful to folks. So thank you, everybody.
Oh, bummer.
All right, well, we'd like to thank all of our lumber panelists. So I heard some interesting comments on alternative materials.
Man,
not being willing
there
to
was a question in there that I
what was
really...
OSB for
Yeah,
plywood.
I'm going to leave the meeting
That's
here.
just silliness.
Yeah, bummer. There was a question in there that I was really looking forward to going to. All the rest of them, I was just like, I mean, they were okay, but there was one that I really wanted to hit, and they were saying, what isn't being talked about that should be? And I was just going to talk all about the Fed, and I was going to give them, everything that I've been talking about in the videos lately, and man, it didn't go long enough to get to that question. What a bummer. But that was pretty interesting. That was John Burns Real Estate Consulting Group, and they're doing a building strategy symposium event right now, and they asked me to join in on the speaking of that. So that was pretty cool. I appreciate you guys hanging out for that. And yeah, give me a little bit of time. I'll probably upload this. Maybe we can talk about it again later. All right. Uneducated Economist. You guys let me know.